Is it the time to buy MasterCard stock as it acquires a crypto intelligence firm? MasterCard Incorporated (MA) shares increased modestly on Thursday following the company's announcement of plans to acquire a crypto intelligence firm. CipherTrace, a cryptocurrency intelligence firm that monitors over 900 coins, is being acquired by the company. It intends to leverage the platform to expedite the implementation of its crypto strategy in light of the growing adoption of cryptocurrencies. MasterCard anticipates concluding the transaction by year's end. The provider of payment services stated in a statement following the announcement. The integrated offering will leverage CipherTrace's digital asset management suite and MasterCard's cybersecurity solutions to provide businesses with increased transparency, assisting them in identifying and understanding their risks, as well as in managing their digital asset regulatory and compliance obligations. MasterCard will be able to distinguish its card and real-time payments infrastructure by merging CipherTrace's technology with both firms' artificial intelligence and cybersecurity capabilities. As a result, it will help customers improve their cybersecurity and compliance when launching digital assets. Is September 2021 a good time to buy MA shares? MasterCard shares trade at a modest forwards PE ratio of 32.96, which appeals to value investors. Additionally, experts anticipate that the company's profits per share will expand at an average annual rate of approximately 27.30% over the next 5 years. As a result, growth investors may find the stock attractive as the year winds down. As a result, considering that MA shares are up slightly more than 3% year to date, the company might rally dramatically to catch up with the rest of the market. As a point of comparison, the S&P 500 index is up 33% in the same time frame. MasterCard appears to be on the verge of continuing its comeback. Technically, MasterCard's shares appear to have recovered recently following a retest of the intraday trend line resistance. The stock, however, has not yet reached the 14-day RSI's overbought level and continues to trade many levels below the 100-day moving average. Thus, following Thursday's statement, the present bull market appears ready to continue. As a result, investors can aim for extended gains above $373.06 or even higher at $393.47. If the stock price does reverse course, it may find support at $333.64 and $314.48. Why should you purchase a MasterCard rebound? In summary, while MasterCard shares have gained 3.71% this week, the stock has not yet reached the 14-day RSI's overbought level. Additionally, the MA stock trades at a reasonable price to earnings multiple and provides tremendous growth potential. As such, it may not be too late to buy in MasterCard stock as the company accelerates its crypto strategy through the acquisition of CipherTrace. Ukraine adopts a cryptocurrency law that legalizes Bitcoin. Ukraine is on the verge of legalizing Bitcoin and other cryptocurrencies following the passage of a new digital asset law by Parliament. President Volodymyr Zelensky has yet to sign the draft law on virtual assets. The measure, which was originally drafted in September 2020, strengthens protections against fraud for investors and enterprises alike. Mikhailo Fedorov, Ukraine's Minister of Digital Transformation, told the Kiev Post that more people would invest in Bitcoin if it became legal and hence safer. Ukraine is the next in a long line of countries to embrace Bitcoin into their economies. On September 8, Ukraine's Bitcoin law got approval from 276 members of parliament, achieving near to 100% support. The law should come as no surprise in light of President Zelensky's recent visit to Silicon Valley, where he met with investors and venture capitalists to promote Ukraine's digital economy in the hope of securing cooperation. Bitcoin legislation. Prior to this bill, Ukrainians received a mixed message about cryptocurrencies such as Bitcoin. Investors have been allowed to trade on Bitcoin exchanges without restriction. Simultaneously, authorities regarded enterprises, particularly trading platforms, as suspicious. If anything, cryptocurrency businesses have been the focus of unjustified searches in which equipment has been taken by Ukraine's law enforcement agency, which has previously expressed reservations about the legitimacy of digital assets, according to the Kiev Post. While the new law provides better regulatory clarity, Ukraine is navigating its own route and conducting business in a manner distinct from El Salvador. Ukraine's citizens will be unable to use Bitcoin as legal money. This position is reserved for the hryvnia, the local fiat currency. Ukraine is opening the road for businesses and investors to use cryptocurrencies in a more secure manner by 2022, with the draft law serving as the first step. Cryptocurrency enterprises will be required to seek a permit and will also be responsible for taxes in Ukraine. Legislators must now approve further supporting legislation and make necessary changes to the tax code and civil code. The Bitcoin community is growing in confidence as the globe becomes more cryptocurrency friendly. However, Ukraine's law had no effect on the Bitcoin price, which has been declining for the past week and has fallen below the psychologically significant $50,000 mark. These two Central American countries, inspired by El Salvador, are considering CBDCs. El Salvador recognized Bitcoin as a national tender just 2 days ago, allowing it to coexist with the US dollar. While many, especially Salvadorans, were dissatisfied, others emphasized a positive narrative. According to Charles Hoskinson, many regions will follow El Salvador's lead. While cryptocurrency such as Bitcoin may be a step too far for the majority of countries, some may be taking the next best step. Honduras and Guatemala in Central America are now investigating central bank digital currencies, or CBDCs. According to Reuters, Honduras and Guatemala's central banks are considering digital currencies in the aftermath of El Salvador's legalization of Bitcoin. In the case of Honduras, this is not a premature step. According to Wilfredo Cerrato, president of the country's central bank. The Central Bank of Honduras also recently began, following board approval, a feasibility study to examine the viability of conducting a pilot test issuing its own digital currency or a central bank digital currency. He stated that the Central American Monetary Council, or Consejo Monetario Centroamericano, should conduct an initial examination of the prospects of digital currency adoption. Meanwhile, the country previously established crypto ATMs, a move that garnered widespread support from the crypto community. On the contrary, Vice President of the Banco de Guatemala, José Alfredo Blanco, stated that iQuetzal, the digital currency, will likely take an extended period of time to finish the inquiry phase. It is worth mentioning, however, that the group charged with working on the CBDC was formed only 6 months ago. Central bank digital currencies have also gained popularity and adoption in a number of other regions throughout the world. Nigeria has only recently created the groundwork for this, with the e-Naira scheduled to start on the 1st of October. Additionally, China and India, among others, have taken significant steps towards CBDC development. ALGO is unable to break through resistance at $2.10, implying a retracement. For the majority of today's trading session, The Algorand price analysis was optimistic, with consecutive green candles appearing on the 4-hour chart. However, a rejection following the achievement of the resistance level of $2.10 ensured that Algorand's price would fall. There was a chance that the ALGO/USDT pair would break through the resistance, but it was unable to do so, resulting in 2 consecutive red candles on the 4-hour charts. Following the price's rejection of the resistance, we can see that it is currently trading at $1.90, a 40.64% discount to its 2-year peak. Simultaneously, another intriguing aspect about this currency is that its market capitalization increased by about 65.20% as a result of the current price spike. Additionally, according to CoinMarketCap data, trade volume jumped by 69.58%. If this tendency continues, we may witness another massive increase in the coin's price, but for the time being, it appears as though the price has been unable to reach new heights. On the other hand, Bitcoin has fallen from $52,000 to $46,000 and is now trading at $45,000. If the current price level is not maintained, BTC may go below the 40K mark. Price analysis of Algorand today indicates a bearish trend. Numerous people have benefited from investing in Algorand. Between September 7th and 9th, we saw a rally from $1.20 to $2.20 following a break above the $1.40 resistance level. This cryptocurrency's movement was momentous, culminating in a 2-year ascent to its all-time high. If Bitcoin prices continue to rise, Algorand may continue its upward trend, breaching more resistances at $2.40 and $2.80. While Bitcoin is attempting to close above the 200-day moving average, let us examine the key technical indications. On the 4-hour chart, the first are the critical moving averages. The current price of ALGO/USDT is going above both the 100-day and 50-day moving averages, according to our price research. If the bearish trend continues, one of the major levels may be breached. Further inspection of the Algorand price chart reveals that following a break below the upper end of the Bollinger Bands and an immediate expansion, a sequence of red candles drew the action slightly below that level. The MACD indicator indicates that the MACD line, blue, crossed above the signal line, orange, indicating a bullish crossover on the 4-hour chart. As a result, the green bars may signal that prices will continue to rise. Analysis of the Algorand price. In the short term, we can anticipate higher ALGO prices if the support level at $1.20 holds and the resistance level at $2.10 is broken and converted into a support zone. This will confirm the uptrend, and the price will then attempt to break through the resistance levels of $2.40 and $2.80. In the long run, we can anticipate continued unfavorable price activity. As investments, cryptocurrency and blockchain are growing increasingly popular. Cryptocurrency and blockchain technologies are getting more popular, but one expert is concerned about their long-term viability. There is no doubt that cryptocurrencies and blockchain technologies are becoming more mainstream as a result of the Bitcoin rise and success. Investors in cryptocurrency, notably Bitcoin and Ethereum, have recently seen their investments pay off, and this trend is expected to continue on the stock market. Thanasis Stengos, an economics professor at the University of Guelph, believes that, despite the rising interest in cryptocurrency, he does not see it becoming a more widespread currency that governments will adopt anytime soon. This began out with Bitcoin in particular as a potential alternative to the conventional currencies that exist, he explained, adding that one thing that is in some ways favorable for the idea is some kind of universal type of money accepted by everyone without having to go through exchange rates. The primary impediment that remains and will never be removed is that currency is printed and issued by central banks and governments. They essentially do this to maintain control over monetary policy. This policy is one of the primary tools for regulating the economy throughout expansions and contractions. Stengos stated that because governments utilize monetary policy to regulate the economy, he does not envision their ceding power in order to promote a cryptocurrency as the preferred currency. Crypto can be used by individuals to transact, generally by people who want to avoid the government's checks and balances of controls through banks that restrict how much money they have in their accounts. Without an intermediary bank to record your crypto transactions, the notion here would be something completely out of control. Things would essentially be untraceable. The issue here is how to ensure that a transaction takes occur and that it is transparent. Stengos inquired. This is where the blockchain concept comes in, because everyone involved in the process confirms the transaction. According to Stengos, having to confirm every transaction through the blockchain places a high processing burden on the system. When it comes to computational speaking, the problem becomes immensely difficult. The processing power requirements for handling and recording these transactions are tremendous, he said, adding that if you go to a currency with crypto, you want it to be scarce at first. You don't want it to overwhelm the market with digital currencies and monies, as they would lose value. One of the primary features of digital currencies' initial design is to create a finite supply that is governed by the need to address a problem. The greater the number of persons engaged, the more difficult the problem would become. The solution to that problem is essentially to run computers for an extended period of time in order to tackle these challenges. Stengos stated that when digital currency, such as Bitcoin, first entered the market, the problems were simple and the benefits were greater. At first, one Bitcoin was worth a few cents, it was nothing. Of course, it's now a speculative asset. People speculate on whether the price will rise or fall. At the end of the day, given the proliferation of digital currencies, they now compete with one another. Bitcoin is presently undoubtedly one of the most common and secure digital currencies on the market. Bitcoin and Ethereum are the two most popular digital currencies that have gained traction. According to Stengos, the energy requirements for the verification and harvesting processes have put a significant burden on the energy requirements that were not anticipated when digital money was originally launched. These things actually get to increase the demands on energy to harvest new currencies dramatically. Countries are beginning to control and believe that alternative and payment schemes would never be able to replace the main currencies. However, they are being utilized to exchange items. El Salvador is the first country to make cryptocurrency official tender. Despite making that shift, the country has been plagued by transactional difficulties. It embraced Bitcoin as a main currency, and this is as foolish as it gets, Stengos said, adding that people who have Bitcoins in El Salvador sought to convert them because they felt they would lose their value. It's the opposite. You'd assume that as Bitcoin became more stable, people would want more of it. The exact reverse is true. You wouldn't want to go to the beer shop or the grocery store with money that has lost its value or fluctuates wildly. There is a lot of uncertainty, and it would never be the currency's standard of exchange that we would expect. NFTs, or non-fungible tokens, are the most popular goods being swapped by digital money right now. NFTs, essentially a tool that uses blockchain technology to provide proof of ownership of a digital asset such as an image, audio clip, or tweet, are currently a fringe item used primarily by tech enthusiasts and artists, but experts say the token's potential uses are nearly limitless, including the proof of ownership of assets such as cars or real estate, or just about anything of value. A non-fungible token is confirmed on the blockchain, the same technology that assures the security of cryptocurrencies such as Bitcoin, and whoever has the NFT is considered the asset's original owner. Many individuals have already invested in crypto and blockchain, according to Stengos, but he feels blockchain technology will be a more reliable investment. Like any investment, when more people get into it, you go out, he explained. The blockchain is not a fad because it's a practical technology. Nobody talks about blockchain, only cryptocurrencies are discussed. Blockchain has resulted in cryptocurrency. Nobody discusses the underlying technological improvements made possible by blockchain. I'd take the technology over anything, he replied. Stengos advised that if people want to take chances, they should do it with things they understand. Go for it if you comprehend the object for which you are taking a risk. Some individuals are unfamiliar with crypto and what it entails. There are many more cryptos, so why would you choose one over another? He wondered. According to Stengos, businesses are looking to use blockchain technology to streamline procedures. What blockchains do is incredibly brilliant, he remarked, adding that the most essential use resides in contract verification in law, legal concerns. I believe it will be widely used in any transaction involving multiple players who need to verify contract specifics. Because it has proven to be valuable, technology is here to stay. I don't grasp the product of it via cryptocurrencies, he explained. Stengos emphasizes that blockchain and cryptocurrencies are not the same thing, and that people frequently mix them together. You have something that is produced on the back of something else that is highly beneficial but not relevant to many other things, he explained. There have been initiatives in the United States to regulate cryptocurrencies, but nothing has been regulated as of yet. Solana, SOL, reaches a new high, but should traders be concerned? Solana is flying high, and the rally is unstoppable. On September 7th, the cryptocurrency market experienced a major sell-off. However, not Solana. After separating from the leading crypto assets such as Bitcoin, BTC, and Ethereum, ETH, SOL has weathered this week's market correction to reach a new high above $214. After achieving weekly gains of 80%, the remarkable rise came to an end. Solana now has 5 consecutive green candles in the midst of a market-wide sell-off. The ability to mitigate the impact of the ongoing bearish pressure highlighted investors' growing interest in the Solana blockchain, which is gradually emerging as a significant rival to Ethereum, the public ledger that has dominated the decentralized finance, DeFi, and non-fungible token, NFT, sectors in recent years. Where is the price headed? That is the million-dollar question that remains unanswered. Will it experience the much-anticipated correction or will it consolidate? What does the future hold for Solana? The awesome oscillators, ALGO, green ending bars indicated a tremendous bullish momentum in the coin market. Additionally, the MACD flashed green, and the dotted parabolic SAR markers lined underneath the SOL price candlesticks. The daily chart of SOL indicated a period of extreme volatility. Even if the volume of trading has not yet reached that of May, the increase has been moderate and not unstable. Following the remarkable increase, SOL crossed the demand zone of $92 to $65. In a nutshell, the technicals are quite positive. The purchasing frenzy, however, pushed the daily relative strength index, RSI, above the overbought zone. As a result, the possibility of price flipping cannot be ruled out. In the event of a correction, the first support level expected to be tested by Sol is $139. On the other side, a period of market stagnancy may commence a period of consolidation at the current level prior to either direction's breakout. Solana's motivator. The need for Solana appears to be inexhaustible, owing mostly to the NFT projects that have sparked activity in the Sol ecosystem. With a massive money inflow, retained buyers are flooding the market. As a result, Sol saw its price increase by more than 50% this week and is spooked by the precipitous decline. The blockchain community greeted the August 15th introduction of the NFT Degenerate Ape Academy, which featured a collection of 10,000 cartoon apes, sold out in less than 10 minutes, and involved 96,000 Sol, which roughly equates to $9 million. This is a tremendous accomplishment. Solana's relationship with the NFT space is far from over. Indeed, one of the most significant milestones reached by the Layer 1 solution ecosystem this week was the integration with the FTX-backed marketplace for digital collectibles. JP Morgan is concerned about El Salvador's Bitcoin experiment. According to JP Morgan analysts, the recent Bitcoin fall was not caused by El Salvador legalizing Bitcoin. According to them, the issue was more about too much market froth. Additionally, they stated that Bitcoin is unlikely to supplant the currency. Business Insider released a piece today about El Salvador's launch of Bitcoin as a dual national currency alongside the US dollar. The story reports that the rollout was met with protests and technical issues. JP Morgan analysts dubbed the rollout a hurried mandate, referring no doubt to President Bukele's enthusiasm for his country to adopt the world's most popular cryptocurrency. According to the analysts, El Salvador's ill-fated attempt should not be viewed as a watershed moment for Bitcoin or other cryptocurrencies. This week's crypto markets were harmed by El Salvador's difficulties, but it was against a bullish backdrop. This type of remark is typical of every traditional banking institution, and the largest bank in the United States is no different. The analysts then proceeded to explain why Bitcoin has no chance against the dollar, citing Bitcoin's significant volatility as a justification for its unsuitability. Very few goods or services are priced or bargained in Bitcoin terms, and Bitcoin is priced in dollars, the analysts wrote. While retailers and merchants in El Salvador will eventually accept and publish prices in Bitcoin, these prices are anticipated to fluctuate dramatically in response to the dollar value of Bitcoin. Additionally, the analysts stated that the fixed Bitcoin supply of 21 million coins will create a deflationary environment that is unsustainable for the majority of economies. Given Bitcoin's limited supply, its purchasing power would naturally increase over time, lowering the price of goods and services denominated in Bitcoin. Economic agents would consequently be motivated to hoard currency rather than use it in such an economy. It begs the question, then, whether these same analysts would much prefer the existing inflationary system, in which the purchasing value of your currency is eroding at an ever-increasing rate as inflation rises. The JP researchers identified two additional points of contention. The first was that the Strike Payments network, which is built on top of the Lightning Network, may pose a security and privacy concern. The other point of contention was the $150 million government Bitcoin trust, which analysts believe may be insufficient if El Salvadorians chose to sell their Bitcoin in bulk. A new payment option has been added to the NBA cryptocurrency betting guide. been following basketball betting, also known as kosalabda fogadas in Hungarian, you'll know that with the change of leaves color, a new basketball season is on the way, and we're about to have a great time on the court as well as with our wallets. It is now bringing a new experience as cryptocurrency. NBA fogadas is one of the possibilities that both experienced and novice bettors may use to enjoy their favorite pastime. Cryptocurrency is swiftly gaining a name for itself in the betting world, and many say that it will only be a matter of time until it becomes a mainstream payment option. We will look at the finest NBA cryptocurrency sites, as well as the fundamentals and how to get started. NBA betting sites that accept cryptocurrency. A quick scan or search on the internet for cryptocurrency NBA betting sites will produce a long number of bookmakers. It can be difficult for a bettor who has never used cryptocurrency bookmakers to make a selection. Fortunately, this information is available, and to make matters worse, it can be obtained in such a way that a bettor can make a rapid and reasonable judgment. Mighty Tips excels in providing credible and dependable information about bookies. The site not only provides information on what they offer, but also on their performance and credibility. Whether you're a seasoned pro or a first-time buyer, the information provided is sufficient to make an informed purchase. It is critical for bookmakers who provide crypto betting to determine which cryptocurrencies are accepted. Bitcoin, Ether, and Litecoin are three of the most popular cryptos. They are simple to use and have a large user base. While there are thousands of cryptocurrencies on the market, it is critical to choose a bookmaker that takes the bulk of them, or at the very least the primary one. You may be a crypto fan who wants to use cryptocurrency as a payment option. However, if obtaining the crypto that is accepted is tough, the experience will be negative. The best advice is to choose a bookmaker that accepts a wide range of cryptos, particularly the major ones. Cryptocurrency, given the benefits it brings, should make the process easier rather than more complicated. It is crucial to note that the finest crypto betting sites are not chosen solely on the basis of their ability to provide alternatives for various types of cryptocurrency. Other aspects that contribute to a bookmaker's dependability come into play as well. Choose an NBA crypto betting site based on its dependability, ease of use, bonuses, and other aspects, not just because it accepts cryptocurrencies. Principles. One advantage of using Bitcoin for NBA betting is that you don't need any extra training, you just make the same bets. The main difference between crypto betting and traditional betting is that you are using a new sort of money. Some refer to it as a different currency. The problem may only arise if you are new to NBA betting and lack grasp of the game's principles. This should also not concern you because this knowledge is widely available. Mighty Tips has thoroughly addressed this subject in their reviews and analysis. All you have to do is go to the website to get the information. You will notice that it is presented clearly. There is no jargon or terminology that a layperson may find difficult to understand. Learn the fundamentals, and you'll be good to go. If you haven't heard of the term the spread, you will be hearing it a lot in NBA betting. It refers to wagering on an event's result where the payoff is based on accuracy rather than a win-lose situation. Because of the shot clock, you only have 24 seconds to wager, which provides a high-scoring opportunity where the points are distributed evenly among both teams. For example, a game between teams A and B with a spread of plus 19.5/19.5 means that A is the favorite and must beat B by at least 19 points to win the wager. Another term you'll come across in NBA betting is money line. The wagers here are on who will win the game. Favorites, like in the spread, are denoted by a plus sign, while underdogs are denoted by a negative sign. In a certain game, The bookmaker may indicate that the odds are minus 210 over plus 250, which means that a $200 bet on the underdog yields a payoff of 210. On the other side, to win $200, one would have to wager $250 on the favorite. Although there are many parallels between NBA cryptocurrency betting and regular currency alternatives, it is crucial to know that there are certain variances, some of which may be positives and others downsides. Some of the distinctions are as follows. Because cryptocurrency has no tangible bills due to its digital nature, you must go the extra mile and create a bookkeeping exchange. There are cheap transaction fees, which is advantageous. Because the cryptocurrency is built on the blockchain architecture, privacy and security are enhanced. Transaction speed equals faster betting and faster rewards. Once you've created an account, opened a crypto wallet, and identified the best NBA crypto bookmakers, you can begin betting and get the rewards of cryptocurrency betting. It will be an entirely different experience. Other advantages include safety, security, low-fee transactions, speed, and anonymity. Use these techniques to create your presence in crypto online sports betting, and join the tech-savvy gamblers who want to reap more while experiencing a completely new betting environment while employing the same old tricks. Are fees charged by all cryptocurrency exchanges? What is a cryptocurrency exchange and how does it operate? Despite Bitcoin's many advantages, its basic wallets have a severe disadvantage: they only support Bitcoin transactions. Bitcoin Core, Electrum, and other wallets are unable to convert it to other digital currencies or convert it to dollars, rubles, or any other currency. And as soon as the cryptocurrency market's price and volume hit billions of dollars, hundreds more exchanges popped up. They are used to purchase digital currency using bank accounts and electronic payment systems, to trade a variety of altcoins, alternatives to Bitcoin, and to convert them to fiat currency, the money we are used to, issued by the state, rubles, dollars, euros, etc. Exchanges should not engage in commercial activity with traders. The exchange's guiding philosophy is objectivity. As a result, the exchange's involvement in the trading process as a counterparty, rather than an adjudicator, might be risky for traders. After all, traders view the exchange as the guarantee of obligation fulfillment in the interaction between the seller and buyer of the fastest-growing cryptocurrencies. Thus, the exchange does not trade, but rather manages trading by managing the trading terminal, order book, the security of traders' funds, and other administrative functions. And the exchange is compensated for this effort by charging large commissions to trade participants, which is entirely reasonable. Exchange commissions for cryptocurrencies. Renewal of the deposit is subject to a fee. It is a fee assessed by the auction's organizers for funds deposited in the trading account. Generally, it is determined by the auction's organizers and is proportional to the amount deposited. As a result, the commission percent is reduced with a greater deposit. There is a cost associated with requesting a withdrawal. As with the first commission, it is set by the exchange and is determined by the client's status, which is defined by the size of the deposit and withdrawal. Commission on commerce. Each transaction generates a commission for the trade organizers who service the trade. It varies between 0.00 and 0.25% of the transaction volume and is also contingent upon the client's status. Fee for inactivity in trading. Not all exchanges impose fees. It entails deducting a certain proportion of your deposit if you have not executed a single trade operation throughout the time periods stipulated in your agreement with the exchange. Exchange commissions and quotas. Cryptocurrency exchange commissions and limitations vary considerably. To get a sense of these figures, it's necessary to evaluate data from popular websites. This is the current state of the largest cryptocurrency exchanges. To learn more, you should visit the official website of the website that is most appropriate for you. A knowledgeable trader must conduct his or her own market analysis, and each platform provides tools for this purpose. Data visualization. They'll demonstrate how coin values have fluctuated over time. The mercantile glass. It will enable you to discern the difference between current buy/sell offers and to conduct a full analysis of the direction in which the price may rush in the future. Historical trade. By examining the trade volumes of a particular pair, you may quickly estimate the popularity of this direction on a given exchange. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.